Hi, folks. Welcome to episode 14 of FinMet Mondays. It's great to have you back on our podcast. And Sunil, the same goes for you. Welcome back again.
Thank you. It's really great to be back and happy Monday, Shawn.
Happy Monday. Sunil, as you know, there is a lot of talk right now about, is inflation peaked and are there signs or visible signs of a recession now? So I'd like to take your comment on that to begin with. How has this talk been affecting the gold markets?
Yeah, it's a good question, Shawn. I think, I've been looking at the data for some of the investment flows and predominantly looking at the ETF gold holdings in New York. And there's a very interesting trend that emerges. What it looks like, at least for the last 3 or 4 weeks, is that on a Thursday and Friday every week, there seems to be an increase in holdings of about 5 to 7 tons. And I think that's really driven by the fact that investors still look at gold as a safe haven. They want to seek some protection ahead of the weekend and ahead of any kind of uncertainties happening in the weekend. So there's a movement of money into gold in that form. And then once the weekend is over and things are normal, then you start seeing some profit taking. And then on Monday, Tuesday, Wednesday, there's a sell-off, which then again starts to return in terms of purchasing taking place on Thursday and Friday. So I think overall the message we take away from that is that gold is still considered a safe haven in these uncertain times. So I think, whether it's inflation or recession, right now, the fact is that gold is a good investment as a safe haven. It still has a case to be made to buy.
Certainly, and we're seeing that gold is able to hold within these levels of 1800 to 1850 for quite some time now. So certainly then there's very strong intent for investors to hold on to gold or buy into gold at these levels. I'd like to take your view on the fact that we had the GDP data releasing this Wednesday for the US, and there's been a lot of talk of, if there's a contraction in GDP, then that definitely means that there are early signs of a recession. So what do you think the impact on gold will be, given that we see the situation play out this week?
Yeah, I think if we see GDP growth slowing off, that's actually positive because that's what the Fed wants to achieve. They want demand to slow off and they want to see prices come off and inflation come into check. So that's actually positive from a Fed point of view. And I think that's going to be good for the overall markets. You may see the dollar getting sold off at that time. And I think, again, that will be bullish for gold. So I expect gold to benefit from some amount of slowdown in the economy and the fact that there's some more certainty coming about in the future. But in the medium term, I think you're going to see a situation where if we start seeing recession, then people will sell gold to try and shore up their capital. But I think that event is probably 3 to 5 months away when recession starts showing.
Interesting. Thanks, Sunil. I think this is going to be an exciting week again with the GDP data and the inflation data also coming out. A small word on that is that as part of our weekly infographic series, we would be releasing a special infographic to let you know a little bit more about GDP in details. So stay tuned for that. Thanks, Sunil, again, and see you next Monday.
Thank you. See you.